What happened in the Korean market while you were sleeping isn't just noise. It's a critical signal for the US trading session tonight. So you need to pay close attention because behind that big green number, there's a warning sign flashing red for US tech. Let's break down what's really going on. All right, first up, let's look at what actually happened in Korea. Because while the main index posted a big green number, the story underneath is really one of divergence and, frankly, a little bit of fear. So, on the surface, this looks great, right? The KSBI index closed up a solid 1.43%. You see a chart like this, you think everything is bullish. But what's really interesting is what's happening underneath this chart. When you dig into which specific stocks were moving, you see a completely different story. And this right here just illustrates the split perfectly. While the main KOSP index, the one full of blue-chip giants, was soaring, the speculative, tech-heavy KOSDAQ index actually fell by over 0.5%. So this wasn't a broad market rally at all. This was a very, very targeted move. So what caused this sharp divide? Well, it's a classic market phenomenon called a flight to safety. And really, understanding it is the key to positioning for the US session. Let's follow the money. And the evidence is right here in the money flow. Foreign investors poured a staggering 2.6 trillion Korean won into the big, safe companies on the KOSPI index. They were buying with both hands. But at the exact same time, those same foreign investors were dumping over 250 billion won from the riskier, more speculative assets on the KOSDAQ. This is a massive rotation out of risk. This behavior has a name. A flight to quality. It's what happens when recession fears start to outweigh the hope for cheap money from rate cuts. Investors flee the dream stocks, the companies that might be profitable one day, and they hide in the real stocks, the companies with tangible, massive cash flows right now. So why does a market rotation in Korea matter for your US tech portfolio? Well, because the money wasn't just hiding in any old safe asset. It was specifically targeting the heart of the AI hardware revolution. The main beneficiaries were Samsung Electronics and SK Hynix, two absolute giants in the AI memory chip space. This wasn't random. It was a bet on the sustained global demand for AI servers, a theme we know all too well. And let's be crystal clear about this. The performance of SK Hynix is one of the best leading indicators we have for its US counterparts. What happens there is a direct preview for names like NVDA and Broadcom. Now, this brings us to the most critical part of this briefing, the risk. Everyone sees this chip strength and just assumes a straight line up. But there's a potential trap setting up that you absolutely need to be aware of. The consensus view, the easy trade, is that the AI bull case just keeps on rolling. The semiconductor momentum from Asia just carries over into the US session and pushes everything higher. That's scenario A. But I need you to watch for scenario B. The crucial number is 25,300 on NASDAQ futures. If that level breaks, especially with heavy selling volume, it completely invalidates the bullish recovery story. This is not a dip to buy. I'll say it again, do not buy that dip. A break like that would signal that the market's recession fears have officially overpowered the entire AI narrative. So let's put all this together into a clear, no-fluff playbook for the US session ahead. Here's your focus. On your watch list are the memory and AI players, Micron, NVIDIA, and Western Digital. The key level you are watching is 25,300 on the NASDAQ futures. That line absolutely must hold. And for your sanity check, keep an eye on the 10-year Treasury yield. We need it to stay stable, right around 4.16%, for this tech rally to have the fuel it needs to keep going. So there you have it. The signal from Asia is clear. Money is flying into quality AI hardware. But the battleground for the entire market is set at that key NASDAQ level of 25,300. The question now is, are you positioned for the rally or are you prepared for the trap?